So let's get right into it, guys. Like I said, we're going to be trading options. Now, by default, Robinhood has trading options disabled for your own good, so you don't lose a lot of money. So if you don't have it enabled, please go into your settings and enable it if you're going to do this. So once you have it enabled, you can go to any stock you want. Okay. Now, let me say this. Okay. In order for this to work, you need to choose a good stock, okay? And a good stock is a stock that is continuously going up in value every single year and or does not have high volatility, okay? So a stock that kind of remains stable over the years, okay? So one stock that does great is AMD, okay? And it's also cheap, and I'll show you why that matters. So if we look at AMD the past 5 years, guys, it's gone up 2,235%, okay? So that's good. We want a stock that's good like that, that, shows growth year after year. So we're going to go into this trade AMD options down here on the right. I'm going to click on that. Okay, so here we are, trading options, okay? Now, there's a couple things you can do. You can buy calls, you can buy puts. You can sell calls, you can sell puts. We're not going to do anything with buy today. We're going to do strictly sell. And when we do the wheel, this concept of the wheel, we start by selling puts, okay? So I'm going to go to sell puts. And let me explain to you guys what this means, okay? Selling a put is basically a contract between you and someone else, okay? And here's how it works, okay? So firstly, there's an expiration date on this contract, as you can see up here, okay? You can choose a date to decide when this contract expires. So May 22nd is next Friday, so I'm going to leave it there, okay? Which means this contract would expire next Friday. And here's how it works, guys. So right now, one share of AMD is going for $53.95, okay? So if we look down here, right, you can see this says 53 here, and then you get 113 over here. Here's what this is saying, guys, and it's the same for any stock. Basically, what this is saying is, hey, I'll pay you, which you would be me or you guys when you're selling the puts. I'll pay you $1.13 per 100 for 100 shares. Okay, keep in mind this is 100 shares, so that's why you want to choose a stock that's low price, because you're gonna need to have whatever this is times 100 in cash in Robinhood. Okay, so that's why I chose AMD. So what this is saying is, hey, I'll pay you $1.13 times 100, so $113. Okay, they'll give you that. If I were to buy this right now, they would give me $113 right now, cash. And here are the stipulations on that. If the price of AMD were to fall to 53 or under by the expiration date, which is next Friday, you would buy 100 shares of AMD at whatever that price is when that contract expires. Okay? And so, the catch here is, if it does fall below 53, let's say it falls to $52, you're buying 100 shares of AMD at 53, even though it's 52, okay? But that's okay, because I'm going to show you guys how you turn that around, and that's why this concept is called the wheel. But let's assume, like for example, today I bought this one down here for $49, okay? And so this was actually 43 when I bought it because the price of AMD was lower. So instantly they deposited $43 into my account. And I can actually show you that quickly here. If I go into my account in history, you guys can see down here. Recently, 10 hours ago, I bought this AMD 49 put, which expires on 5/22, and I'm selling it $43. Okay, so I got instant $43. I can do whatever I want with that. I can take it out, go buy pizza, go buy popcorn, whatever. Okay, and so what you kind of want to do here is get a price that's unrealistic. Okay, like I chose 49 because the price of AMD would have to fall basically $5 by next Friday. Okay, which is very unrealistic. That's almost 10%. It's not gonna fall 10% by next Friday. I mean, it might, but the probability is very, very, low that happens. And so what's gonna happen, hopefully, is that by next Friday it'll be above 49, and once it hits 4 o'clock on Friday, I no longer have this contract anymore. Which basically means they paid me $43 and I kept it and I'm good. Okay? And you want to keep doing that over and over and over again, okay? Now, of course, we got to address what happens if it does fall below 49, okay? So let's say it were to hit $48, okay, by May 22nd. So then I would instantly purchase 100 shares of AMD at $48 or whatever it might be. It might be lower than that, but let's assume it's 48. I would buy 100 shares of AMD at 48. So there's two things that can happen here now. Firstly, you can just wait and hope that stock goes back up. And that's why you want to choose a stock that has good performance year after year, because AMD, I mean, if it were to drop to $48, it most likely will go up within the next couple of months again. And then you can just sell them, So let's say I bought them at 48. In a month, it might jump to 50, And I could sell it and I would still make $1 profit on a share because I bought them at 49. And so I'd still make $100. Okay, so I'd make $100 plus the contract, which was 43. So I'd make $143. Or what you do is you continue the wheel by going to selling a call. Okay, the way selling a call works is you have to have 100 shares of a stock, which if this put contract falls through, you will have 100 shares. And so you'll come over here, and this is how this will work. Let's say I do get that AMD, it drops to $48. So what I would do is I would come up here and I could purchase this contract. Okay, here's what this contract is saying. We'll pay you $56. Okay, so I would get $56 instantly again, and I keep that no matter what. And here's what's going to happen. If the price of AMD rises to 57, you instantly sell those shares to whoever bought this from you. Okay, but not only do I get paid 56, they're buying each of my stock for $57. Even though I bought them for 48. So I'd be making $9 on each share, and I'd be selling 100 shares to whoever bought this. So I'd make an extra $900 plus the $56, guys. And then you'd be rid of those 100 shares, and then what you do is you come back to put, and you do the same thing over and over again, guys. Right? You'd come back down here, and you could purchase this contract right here again. And again, instantly, you would get $24. Hopefully, it doesn't drop before 48. If it does, you do the same thing. You'd go back to selling the call, and so you keep doing this over and over again, guys, and it's just continuous money, okay? Like, you can't lose unless you pick a bad stock, okay? I shouldn't say you can't lose. You can, but it's very unlikely, okay? If you do this right, you won't lose money. But again, don't try it because you probably will end up losing money. And let me just show you something quick, guys. Like, let me just show you how much money you can make. If we look at Google, okay, which is Alphabet here. So Google is trading at $1,353 a share, okay? Like, look at this, guys. If you had $100,000 just laying around, right? You can literally live off of just doing this. If I go to sell put, right, and my contract expires Friday, look at this, guys. You could go down, and let's do one that's it's just not gonna happen. Like I could buy this one right here, okay? The price of Google would have to fall $120 or so in the next 5 days of trading, which again, it's very unrealistic. And like you can even see this column here that tells you the chance that you profit. I mean, look at it. There's a 96% chance that you're gonna profit from this. If you had, over $100,000, you could buy this and you would make $1,350 a week just by doing this. So that comes down back to that concept of, it takes money to make money. You need money to make money, and it's very true here when it comes to trading and investing in the stock market. But yeah, guys, I'll update you next week. See if my AMD put falls through or not. I'm hopeful that it won't drop below 49, but again, anything's possible. But regardless, I made $43, and if it does fall through, I'll just go and sell the call, or